I don't normally do this, but okay. So depending on whatever micro you're supposed to be trading, whatever thing you're supposed to be using ICT wise. But okay, let's just take this scenario just for this. That one of the things you understand ICT wise, in order for something to be an order block, it should be leaving a certain displacement, which has to break a structure for you to aim higher to wherever you're supposed to be going, depending on whatever you're trading. And then you're supposed to look for what normally we call a return to order block or a retest, which is some people love calling it, let me see, oh, still in here, which you used to call a return to order block after breaking a structure, and then you're aiming. Now remember, you've already gotten what would be entry number one on a higher time frame, but even in there you're supposed to look for something. In this very situation, there is another order block in there, which is here, multiple candles printing the same way, which are also giving you a return to order block, depending on what you want to see. Now, given that you understand most of the times the reason why, because of this displacement and the way it was, okay, the overlapping, you're going to market maker model. But when you look at this, that this gave you the consolidation, then they literally consolidation, they distribute, consolidate, distribute. You literally expect a certain retracement, especially back to this level of the consolidation. And for those ones actually who want to be like, I'm not going to take the whole order block, and I'm just going to take the previous order block in here that broke the structure, this, that it broke this structure, for that is only for ICT traders, guys, which broke this structure down here to push up, so that it has to be respected to go back up. Now, whatever you're using ICT wise to give you whatever the entry is, let us just say now you've gotten your entry, it's going. But remember, it's on a higher time frame. But you're supposed to be capitalizing on the lower models to understand where we're supposed to be going. Remember, you're just using different influences, which I don't want to call them. Oh, can I use them PDRS? Okay, whatever models ICT is teaching. The whole point is you're using different things to give you different entry criteria, just like you understand that because you see this there might be a certain entry. When you see this, you'd understand where you'd expect another entry. You go to a lower time frame. Oh, sorry, I've skipped one. So you would understand that because of this, let me just delete this. Sorry. Because of this previous order block over here, you'd understand where in a lower time frame you'd expect a retracement back onto this in order for you to get that buy. There's so many. The whole point in here is you are just adding the definition of adding to the winners is you understand the higher time frame sentiment, just like anyone actually who may be like trading Quasimodo. You have to understand what is up in order for you to just add on what is up to just get different entry criterias. You know, you just capitalize on the entries. Capitalize, go. Capitalize, go. Capitalize, go. Capitalize, go. Capitalize, go. So you're just looking for different entries on lower time frames, but you understand what is happening. Now, of course, you can use other confluences by understanding why at this time actually it's supposed to be doing whatever it's supposed to be doing, because of, let me just say, for those of you who understand the different confluences like the silver bullets, the silver bullet entries, you can also understand different, maybe like looking for uh, what we call what we used to call, because I don't trade ICT anyway. What we used to call maybe things like order blocks, breaker blocks. You could be using should I call it standard deviation, because I'm seeing a standard deviation projection around here, which would usually show you that if you're going up, you could be mapping Asian range versus when you're looking at where the Asian range to find the manipulation, which also has to draw you back to understanding which day of the week you are in before you start running, and that is the quarterly theory. If you actually understand that, you'd understand why, just by looking at these candles, you would understand with the weekly structure why you would expect a retracement back up if you are going to be doing anyway. Like, yeah, if you're going to be doing the quarterly theory, you would really understand why at some point you would expect a manipulation, then the distribution, then you would understand why you would expect a retracement, possibly on a day like today. But the whole point is you're just using the time frames. Let me not just bore you. So that's what I was meaning. I didn't want to go into so much details because I didn't want to bother myself. The whole point is I think you understand what ICT wise it teaches. Hope that helps. So you're just looking for different confluences. And before someone comes in being like, hey, it's the same thing, depending on what strategy you're using, you know? Because even the ones you can still go wherever you're going, you can still find different retracements, what you would expect to continue going. You'd understand why you would sell at some point and why NQ would be pretending in a certain way. So that is it. Hope that helps anyway.